But Mr. Sanjiv Bhasin, as always, also joins us on the show. Hi, Mr. Bhasin. Good to be speaking with you. Let's start by discussing financials itself. Big boys, HDFC Bank, Bajaj Finance. Quarter after quarter, they continue to surprise with the good growth. And HDFC Bank, do you think it's out of its slumber now?
Yeah, good morning, Anisha. Well, I've been a contrarian on your channel for the last 3 months when the results saw the biggest sell-off ever. At two-time price to book, you had priced in all the negatives, and you have a fall in the CDR ratio, improvement in deposits, which are at a record high, and we know that the deposit or the liability franchise has been in a little bit of a quandary because of more inflows into mutual funds and such. But I think they've found a very good base. The bank is doing extremely well on all parameters, whether treasury, whether lending, or whether the loan book. And I think that this was a once in a many years opportunity to get a two-time price to book. And I came on your channel and said 1350 will not be tested now ever, maybe in this year. So we are still holding our ground that this is one of the pedigree stocks which can outperform. Quarter on quarter, the results and the other uptakes will go. This is the time to be in large cap private banks, take some money and chips off the PSUs because of higher yields and higher oil prices, which could see the deposit franchise. So we are overweight on HDFC Bank, and as a disclosure, this is one of our top picks in the last 3 months.
Okay, fair enough. That's the view coming in on HDFC Bank. That move clearly not going unnoticed.
Mr. Bhasin, what's the best way that investors can play this entire metal rally? For gold, do you think it's best to just buy that asset directly, or do you think even the likes of Muthoot, Manappuram, Kalyan Jewellers, Titan are a good bet? Because Muthoot has already run up, almost 1650 thereabouts from 1350 etc. that was trading at earlier?
Yeah, Anisha, we live in strange times. I mean, bond yields are higher. The gold is at all-time high. Stocks everywhere are doing extremely well globally. And, some asset class has to give. We saw that a picture of that yesterday as people are now wary of what the Fed, the Fed has people who speak out of turn and keep changing the tables of maybe June going to September and so on. But I think gold has been a far outlier which nobody expected. We still think Titan and Muthoot and Manappuram could be very good plays. But look at the smaller plays. Yesterday the numbers from a company called bank called Dhanlakshmi were very strong. Dhanlakshmi is a direct proxy to gold coming in from the Kerala route. Their 13.5% business now is gold lending. And I think as gold goes higher, your franchise level and your NPA levels fall. These have a 2.5% yield on a monthly basis. Dhanlakshmi Bank is something I would play. As a disclosure, this has been in our portfolio from 32, 33 level. You cannot get such a big franchise at 1,000 crore market cap. And we think HDFC Bank and would be ideal plays. Titan on corrections could be an added play because we know this is a slightly quiet season. Once again, the celebrations and wedding start, Titan will again be in the limelight.
Sanjiv, how was your London trip?
Yeah, good morning, Aisha. Excellent. You had the best weather. The markets were doing fine. And I think a lovely break, which was well deserved. And I think, we continue to be very, very positive on the Indian markets, but nothing like the London weather right now.
Oh, absolutely. Nothing like London summers. But tell me, given what the market was doing behind you while you were in London, I'm sure it also gave you a lot of time to think through as to what is it that, one can add to our portfolios right now, considering this seems like a multi-year bull run. Give us some specific ideas that one can work with.
Well, firstly, let me tell you, HDFC Bank was my contrarian play that has played out perfectly. India Bull Real Estate, which I've been advocating from 90, 100, 110, hit a new high. The company is in the foray of raising capital today. There will be a turnaround because real estate is doing well. We still think India Bull Real Estate is the most undervalued inventory stock. And once this merger with Embassy goes through, I think the date is now 24th April, you will see a re-rating of the stock. But now we are looking at 2-3 mid-cap ideas. Firstly is UPL. UPL is the largest specialty chemical company in the country, one of the largest in the world. They've also had a problem because they had debt of about $3.7 billion, which was in the process of getting divested either through a right or some subsidiaries. Now there is talk of Adventa, which is their global seeds arm, seeing a divestment that is valued at close to $4.5 billion. So even if there's a 20% dilution, that will substantially reduce the debt. There won't be any need for raising capital. Secondly, their other businesses, particularly the pesticide and the agrochemical is doing extremely well. And sunflower and canola prices have risen. Secondly, I am very, very positive because their direct outflow into Argentina, Brazil, that is seeing huge attraction, and they are actually a beneficiary of a weak rupee. This stock trades at a market cap of 37,000, which is just two time price to book, price to sales, and at a 1.2 time price to book. This is one stock I can put my money or bet that this can even double in the next 2 years. And also the valuation is giving me a lot of comfort, as I think specialty chemicals will be the fastest to bounce back, particularly a large part of their businesses. My second pick would be, Persistent System. Now, I've been very, very bullish on Persistent since a long time. The numbers are due on 21st. This will be one of their best quarters. Their BFSI space and the new product launches are doing extremely well. And I think as a proxy to the rupee weakness, Persistent fits the bill to be one of the better mid-cap performers. We think you can even scale 4,500 in this stock. So that's a good place to hide. And last but not least, I just mentioned the Dhanlakshmi Bank, which I think is a very good proxy for increasing CASA and their gold business. Now they have 13.5% of their business is gold loan, which as the asset does well, will again be an outperformer. These are some of the things. HDFC Bank continues to be one of our top picks, and we would use all declines to buy.
Absolutely. So a lot of those gems coming in from Mr. Bhasin. But I also wanted your take regarding real estate pack. You have the update at the bottom of the screen coming in from Macrotech, and they have not only managed to achieve guidance in terms of the pre-sales, they've actually managed to beat it as well. Of course, the best quarterly performance, the pre-sales are up 40% on a year-on-year basis. Collections have shown a growth of 20%. They've managed to actually reduce debt further as well, and the business development activity across the board in terms of the development value as well as the pipeline looks very strong for these companies. Mr. Bhasin, the base for these companies is high as it is, but they're managing to deliver a 40% kind of pre-sales growth year on year. How long do you think this rally can really continue?
Well, Anisha, as you are smiling because of gold, the wealth effect globally is in India is playing out extremely well. And where will you get assets now cheap? Real estate has been the best performing sector after 10 years of lagging. DLF ever hit 900 rupees was pre-IPO or the, maybe 15 years, 10 years back. And now it's coming back. So I think, like I said, India Bull Real Estate is one of the best proxies which you have. They own, their market cap is less than just about 6,500 even after this move. And I think the type of inventory they own, particularly in Maharashtra and Delhi, in NCR, I think this stock can easily be re-rated to be even more than double once they get the merger done and there is infusion of capital by the promoter or the 3-4 large players including Blackstone. So be selective, try and catch which stocks you are which are looking good. We suggested some names. We did take some profits in DLF, but we would be liking to add some of DLF and Godrej on correction. However, right now for the real estate play, India Bull Estate remains is our top pick.
Okay, those are some of the picks what you're watching out for within realty. But what about some of the recent IPOs, Sanjiv? Anything that's caught your eye or anything that you like within the new age tech space? For example, as part of Bernstein's strategy, they've added Zomato now as one of the new age tech stocks.
Yeah, so we chased Zomato from 50 rupees a one, and now it's about close to 185 all-time highs. I think it's a consensus play. I would not chase it at this price. We would still be little, in a profit booking mode there because a large part of that rally has already played out. We would rather concentrate on the banks, and we think that private banks now are giving you a very good opportunity. Look, if credit has to expand and inflation is moderating, particularly in the Indian context, then I think some of these stocks can do very well. And like we suggested, some of the specialty chemicals as a sector, SRF has bounced back very strongly. UPL we think can be easily re-rated to even double from here over the next 2 years. And some of the IT stocks, these are looking extremely attractive at this price. But like I said, we have to be a little very aware of the point that now some of these valuations on gross sales value or whatever metrics you take are trading at very, very high levels. And even though the market is at new highs regarding these new age stocks, I would be a little wary and take some money off the chips.
Okay, be a little wary. That's the word coming in from Sanjiv Bhasin. The consumption side as well is on the lookout today, though on the downside. Citi has come out with a note wherein they're opening a downside 90-day catalyst watch on both Page Industries as well as on Bata. Sanjiv, would you think that it's best to avoid consumption right now till you actually see a meaningful recovery come by?
No, we have Nestle, Bata and Patanjali as our top picks. And look, Aisha, there is a big election. You are aware of the spending patterns. People have moved from campus to the Batas. Bata is a contract manufacturer and their costs are reducing on a quarter-to-quarter basis. I think sales are just round the corner. Footwear is a necessity. I would rather use any line to be adding on to Bata and Patanjali. Nestle has been our top pick. They've got an award on the Maggi noodle side. I think that will be another positive. And if we are expecting that rural incomes will do well, rural incomes are not two-wheeler sales. They will also spread to the basket because the aspiration to grow into newer brands is now very popular in tier 2, tier 3 and the lower strata. So I continue to think Bata can be an outperformer from here. You will have to ignore one more quarter of maybe lackluster numbers, but as a brand, you cannot get a better name than Bata.
Okay, fair enough. That's the view coming in.
So, Bhasin, what's the view on pharma? What are the top bets within that? Anything interesting that has come up on your radar?
Yeah, Anisha, before that, let me add one more real estate name which we are very bullish. As a disclosure, we've added this stock when we've had it since 12 rupees, 16 now, 32 also we thought. That is Hindustan Construction. And we think Hindustan Construction has got, bypassed in a lot of this frenzy for stocks which have got real estate assets. And we think Lavasa has been cleared. And now we think that all the, uncertainty has been laid to rest. This stock can easily double from here and still look cheap because of the inventory which they had. They are in the process of reducing debt. So if you are looking for a real estate name, it would be HCC. The other part which you asked, I continue to be very, very bullish on Sun Pharma, Dr. Reddy and Lupin. Lupin is our dark horse play over there. We think that could be a very, very strong performer on the back of results and their, their generic side pricing power which they have now got in the US. So Lupin, according to us, is a very, very strong contender for giving more than double-digit returns in this year. Sun and Dr. Reddy are two other picks which we have in our portfolio.
Okay, Sanjiv, always good to have you on the show. Thanks for joining in and giving us all those ideas to work with.
If you like this video, then like, share and subscribe to ET Now.